The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. I'm delighted to welcome you to today's webinar on the financial risks of exporting, the first of a three-part series on managing the different risks involved in international trade. My name is William Barnes-Graham, and I'm the Digital Content Manager at Open to Export. We are an online community helping small UK businesses get ready to sell overseas through our step-by-step articles and guides, regular webinars, our Export Action Plan tool, and our quarterly competitions. You can find out about all of these on our website at www.opentoexport.com. Open to Export is powered by the Institute of Export and International Trade, the UK's professional membership body for traders, offering a unique range of individual and business membership benefits, education and training catering for beginners through to master's degrees, and an always exciting and prestigious programme of events celebrating UK businesses' exporting achievements. We will be running a live Q&A at the end of the session, and you can ask questions at any point during the webinar using the question box on the control panel to the right-hand side of your screen. We've got two fantastic speakers from Bibby Financial Services today, in Craig Donnell and Yvonne Vidal-Anderson. Bibby are corporate members of the Institute and are the UK's leading independent invoice finance specialists, currently providing cash flow funding for nearly 7,000 businesses. So without further ado, over to you, Craig and Yvonne.
Thank you, Will, much appreciated, and good afternoon to everybody. So I suppose what I wanted just to talk about today in the next 30 minutes or so with my colleague Yvonne was who we are and actually what we do, the financial risks that exporters have come across, and we've done, over a number of years, large amounts of research. So we'll talk you through some of that. How a good financier can actually help you is an important bit as well within this presentation. We'll actually look at some contracts and what we actually look for in contracts, and also terms and conditions. What's some good housekeeping to have in your terms and conditions? We'll also give you a little bit of an insight into when we're lending money to our clients, what sort of things do we look out for? So we'll share that with you, which will hopefully be of interest. And then hopefully throughout this presentation, we will give hints and tips as we go through about how you can mitigate some of these financial risks. So if we just move on to the next slide, which I've covered the contents of what we're going to go through. And I think, as Will said, if you have any questions, obviously, please feel free to ask both Yvonne and myself. So if I just look at the first slide, the next one, in terms of who we are, Ian. So as Will highlighted, we are the leading independent financial service partner in the UK. We're a family-run business and have been for around 200 years. So Sir Michael Bibby and the family are still heavily involved in the organisation. So we still retain a family feel. We do support a number of businesses all over the world. We've got 1,200 employees now, and has recently been in the Times top 100 companies to work for. So we're a good place to work. We have got offices and we have got countries all over the world. And currently as well, which is interesting for our exporters, we fund debt in around 120 countries all over the world. And we will fund all types of businesses, those that are just starting up, those that are sort of more seasoned, if you like, but we look at all types of business and provide all types of funding. Some of the other products we offer as well as invoice finance. So some of you might have heard that is confidential invoice discounting or factoring. We also offer asset finance, construction finance, trade and export finance, as well as foreign exchange services as well. So that's a little bit about us. Ian, if we can move to the next slide. So for some of you, you might not be aware of what invoice finance is. So very, very quickly, it is funding for businesses selling overseas. And I'll just take you through very, very briefly, step by step, what it is. So when you have an invoice and you raise that to your customer, what you would do with an invoice financier is you would send us a copy of that invoice. We would pay up to 100% of the value of that invoice to you within 24 hours. Now, 100% it ranges from anything from 50 to 100%, depending on the debtor and other associated risks. But we would pay the value of the invoice in 24 hours. So if you just think about that, if you had to wait 30, 60, 90 days to get your money, by getting it within 24 hours really, really does help the cash flow of your business. We would then collect that debt for you by speaking to your debtors, or for some businesses who've got really good collection systems themselves, they would do that themselves. And then when the money does come in, any remaining balance minus our fees are then taken at that point. And in very simplistic terms, that's what invoice finance is. It really does use the invoices you raise to get the cash for you quicker than waiting your normal 30, 60, 90 days. Okay, next slide, please, Im. So what are some of the financial risks that are out there for exporters? I think what we've done here is just drawn on a lot of the research we do with the sort of export community, our existing clients, and have put together some of these risks. I think I appreciate on the call we might have a range of sort of exporters, those that have not done it before and thinking about doing it, to those that are quite established. But I think the key word I would use is around planning and research. I think the less likely that people, plan, what we definitely see is exporters can run into problems which I think we see learning on your feet really can cost money. So the first financial risk that we've come across in our research is by far actually the greatest. It is around currency volatility. The research that we've done shows that businesses trading overseas have been disadvantaged to the tune of around £69,000 in the past year due to currency fluctuations. And what that is basically is when you start with the sort of deal or the transaction, what it was priced at and what profit you thought you would get out of the deal, eventually when it's paid and if the exchange rate changes, that's where you can incur costs and you weren't expecting. But really, really important in terms of foreign currency. I would say definitely review your foreign currency arrangements. If you haven't done that, make sure the rates you're getting when you're dealing are the best rates you can possibly get. But it's really, really important to make sure you've got a plan around your foreign exchange. I think the second thing we see around some of the risks are around accurate paperwork. And I think trading internationally, there's a lot to it. There's export licenses, customs declarations, VAT, invoices, proof of export, and the list goes on. So there's a lot of paperwork. And if that paperwork is not correct, then it can lead to risks, and it could well be you're not complying with legislation. And I suppose importantly as well, it can avoid delays in shipping if you get it right. Now, any delays when trading internationally can cost you money. It will definitely cost you time, and all the sort of reworks of paperwork can, as I said, be a very, very costly sort of exercise. So making sure you've got the right people around you to complete paperwork correctly is, again, I think a very important thing for an exporter. The other things on here, that there is undoubtedly trading internationally, there's extended payment terms, which if you don't use somebody like an invoice financier to get you that cash quicker, as we've spoken about earlier, then I would really urge you to look at how you negotiate payment terms down. The quicker you get, more cash flow. So really negotiate hard when you're doing that. Collecting money is well. I think it's one of the key challenges. I think trading internationally, if you set up a deal. Generally, you would do that in English, I would suggest, but that's not always the case when you have to get paid. So making sure you've got a good collections team around you, or you have a third party to do that for you is really, really important, because making sure you're on top of your invoicing, getting it paid, getting the money into your bank account is a really important thing for you as well. I think bad debts is well. The advice I would give around bad debts is a couple of things, really. Obviously, making sure the debtors you're dealing with and the customers you're dealing with are creditworthy. Making sure that you've got some sort of protection in place, so you can protect your debts and you can get credit insurance or bad debt protection to cover you. And also thinking about how you set some money aside each month to cover you, just in case you do get a bad debt. The last statistics I looked at was bad debts were on average around £20,000 a year. So for a lot of business is out there, it's a lot of cash to write off in terms of £20,000, which is the average. And unfortunately, that has been increasing year on year. So hopefully that gives you a feel of all of our research and what some of the financial risks are, and you can really start to think about how you mitigate them. I want to now hand over to my colleague Yvonne, who's just going to give you an update on sort of contracts in terms and conditions, what to look out for and what to include. Thank you, Yvonne.
Thanks, Craig, and good afternoon, everybody. Contracts, terms and conditions of sale or purchase orders. So what are they? What is a contract? It is a clear definition of what products or services will be provided, but it's more than that. It's when you're on the hook with a legal obligation to deliver. It defines yours and your customers' rights and the responsibilities to deliver. We always ask our clients to recognise that if they're signing a customer contract, they are committing to those obligations on their terms. So if the contract or the terms and conditions are in a foreign language, we do urge our clients to get them translated before signing and not first afterwards, perhaps when a query or a dispute arises. And what should a contract include? There will be clauses subject to the specific service or product, yet generally speaking, it will define the parties involved, details of the product or service, delivery terms, payment terms, perhaps any interest due on late payments, guarantee obligations, conditions regarding disputes, returns and quality, including timelines for making any claims, that's really important, right of set-off clauses. For example, claims made by your customer against older purchase orders and invoices that can then be deducted from fresh debt not yet paid for by the debtor, which in some industries and where staged deliveries take place, we recognise this can be particularly disadvantageous. Terms of the agreement, whether annual or rolling, never be out of contract. If you have signed the customer's contract, this may weaken any rights you think you may have. Termination of any agreement, mutual or otherwise. What are the time limits? Ensure that if the debtor wishes to end the relationship, that any goods in production for that customer will still be taken. Other regular clauses include retention of title, meaning that title of the goods do not pass to the customer until the invoice has been paid. A ban on assignment, we see this a lot, particularly with overseas customers. This means that if you do take up, for example, an invoice finance facility, there will be a clause that says you cannot do this without asking the permission of the customer if you're signing the customer's contract. These are very easily overcome. Usually we have a range of waiver letters that you can send out to a customer seeking waiver on a ban on assignment. Insurance, for example, limited liability insurance. And for the service industry where personnel are placed, always make sure that you understand what's required in terms of local taxes and who pays what. Very importantly, which law governs a contract? or the terms and conditions. If it's not your contract, the debtor will almost definitely choose the law of the local market, which in a worst case dispute scenario or pursuing for non-payment can mean travelling to that foreign country, overnight stays, legal representation from a local source, state authorised translators as deemed required by the court. And what does all that mean? It means additional cost which you may not have budgeted for. That's a real snapshot, but hopefully it gives you an idea of the role that these documents play and how important they are in the process of exporting to overseas customers. Next slide, please. This is about what we look for when we are lending, and I'm sure that we're no different to other funders in the marketplace. Well, we will look at generally at these four areas. So if we start by looking at management, we'll look at the experience of the business that we're being asked to fund. How long have key personnel been in the business? Expertise relevant to the product or the service? Strategies, growth plans, what the route to market is, what makes the business stand out. You know, maybe there's a website that we can look at where the client will share the values and ambitions of the business. We understand that new starts and smaller businesses may not be as formulated in their plans or as established businesses, but we will have a look at what information is available. In terms of the debt, we fund when risk transfers as per the Incoterm, and I'm going to come on to Incoterms later on. The invoice must be for a product or service delivered. So generally, we don't fund pro forma invoices. Invoice finance lends itself to funding against invoices where the product or service is complete. We like to see the customer name and address, the VAT number where it's appropriate, the Incoterm, details of the product or service, terms of payment, the due date, currency, where to pay, and that the invoice is in conformity with the contract or the PO that we've seen. The debt has to be collectible. That means many things, but importantly, what market? Where are you selling to? Can you sell on open account to that particular market? When we look at dilutions, we're talking about evidence of credit notes generally. Why are credit notes being raised? How often are they being raised? Obviously, we can't collect funds previously provided to against invoices if at a later date a dispute occurs. So it's important for us to understand throughout a working year or the previous 3 to 6 months what the dilution and credit note history looks like. However, we understand that when we come to looking at financials, not all businesses are solvent. So if we're asking, is your business solvent, we're certainly not saying to customers, it has to be before we'll lend you any money. We know that there are startups, businesses in development stage, as well as seasoned exporters that will be talking to us for help. There are businesses who have lost turnover and revenue due to market trends, due to bad debts, due to foreign exchange losses. It's important for us that the funder becomes the solution for return to profitability, not an obstruction to business to develop their growth. There has to be mutual benefit as well. All of these mentioned considerations should lead the funder to present a cash flow solution which meets the needs of the client and which the funder believes mitigates any risks in place and will allow both parties to benefit from the facility. Can I have the next slide, please? Incoterms. Incoterms play a key role in the export process. They're a set of rules. It's important to understand that. They are not law. They were first established in 1936 by the ICC and are commonly used to trade terms in foreign trade. The latest version of Incoterms is 2010. You can easily find Incoterms free on the internet. Otherwise, you can buy a copy from the ICC bookshop. So what do they determine? As you can see here, where delivery takes place, who's responsible for risk, who bears the cost, the obligation of each, the seller and the buyer, and importantly for us in any funder, where we can begin to fund. The next slide, please. And this slide, as well as explaining where risk transfers, very nicely explains where the funder, where Bibby could fund if you had an agreement in place with us. Ex-Works is the soonest place where risk transfers. However, it doesn't lend itself to export. We would expect to see free carrier at a named place, which can also be at your own premises. But free carrier allows the exporter to evidence that the goods have been exported and can place them in a VAT refund position, which Ex-Works does not do. So if you want your funding early, it would be against free carrier, because that's where risk transfer is the earliest. If we go to the bottom of the chart and we look at DAP or DDP, where you're obliged to deliver the goods to the place of destination, and we would expect to see evidence of delivery to place of destination, that's the longest period of time before you can sign an invoice to the funder and receive funds. So in a nutshell, FCA, quickest for funding, DDP, the slowest for funding. And the next slide, please. I'm going to hand it back over to you, Craig, I believe.
Yes, thank you, Yvonne. And so hopefully in those last two slides said, you know, just sharing some of the insights we go into when we're looking at lending monies, hopefully that would be of use to you. But also I said, in terms of the Incoterms, if you're new to it, there are lots and lots of people like Open to Export, you know, in the Institute of Exporters, who can help you really understand that, because it is a really important thing in terms of, you know, when does the risk transfer from you to your buyer, and importantly, as Yvonne said, from a funding perspective, how soon can you get financing against those invoices you may raise? What I just wanted to look at now was working with a financier. There's lots of financiers out there, as you would probably imagine. Bibby can do all these things, but I do acknowledge there's other people out there. I would just say make sure you've got a really, really good relationship with them. Make sure you're having regular contact and they're updating you on a regular basis. And also really important is people want to speak to the decision maker. So I would say whether you're starting up or you're established, make sure you have that relationship with the decision maker. So things to look out for in terms of support. Well, 100% of export ledger funding. What does that actually mean? Well, that means some funders out there will not fund 100% of the ledger if it was export related, but there are some that do. We're obviously one of those, but make sure when you're speaking to your funder, they can confirm how much they will fund, what countries they want to fund, which ones they don't. Again, single debtor relationship funders, some will do this. A really good financier will, even if you've got one debtor, and what we really appreciate is when you're first starting up, it may well be you have just got one debtor, you've got one contract, one customer. So, you know, make sure you can get funded, even if you've just got the one debtor that you're working with. Expert service, I think, again, this is really important for me, is dealing with a funder that specialises in exporters. We see a lot of other organisations where their relationship managers may have a portfolio of, say, 40, 50 clients, and there'll be one or two exporters within it, and the remaining are the UK domestic businesses. And I think sometimes sometimes the exporter in that sort of portfolio gets lost. So what I would say is that work with specialists who only deal with exporters. They've got more empathy, they've got more knowledge around the complexities, and can really help you on the journey as you progress. Foreign exchange management, we've spoken about that already, but again, I would say if it's in-house and the solutions are all under the one roof, sometimes that can be beneficial. But with foreign exchange, please make sure you're getting the best possible deal on the rates that you're receiving. I think I've mentioned before about making sure when you're looking to fund certain countries that they can be funded, because not all of them will be. There is some higher risk countries to fund than others, and before you accept contracts and accept deals in those countries, there's lots of good advice out there whether you should be doing that or not, or some of the things to look out for in certain countries. Languages in time zone support. Again, I've alluded to this before, but making sure if you're working with a funder, they have got good collection teams who can speak a variety of languages in the countries that you're in. And it's important as well that you're working with funders that have got, I suppose, offices in other countries that are in some of the time zones that you're going to be dealing with. It could well be you're ringing up to collect your debt, and they could be in bed, and that's not what you want. So again, working with a funder who can help you with that is important. And then finally, as I said, I think I've spoken about, is the bad debt protection. So you can protect your debt or get them credit insured. Political and economical risks are also included as well. So those things are very important. So when you're sitting down with a funder and you're looking to either progress your exporting business, or you're looking to start it for the first time, then those are some of the questions I would be asking and thinking about when you're meeting your funder, and to make sure you've got the right funder for you. The next slide. And this is just, I suppose, the final slide before we go to questions. And this is who in myself and Yvonne are really. We've got vast experience. Myself working in the big banks for a number of years, and now managing director of Bibby. And Yvonne again is worked all over the world in this sector. So we've got our contact details there. I said, please ask us any questions you want to now, but if you go away from this and you think, oh, I wish I would have asked that, then please feel free to pick up the phone to either of us, and we will be happy to help you. Our main aim for Bibby, but more importantly for the UK really, is to help as many exporters as we can, and give them some advice as we go along the way, and we can fund them to help them grow and achieve whatever ambitions they've got. And we genuinely mean that. We really do want to help as many exporters as we can in the UK. Thank you for listening, and back to Will to open up for any questions you may have. Thank you.
Many thanks. Thank you, Craig, and Yvonne as well. And I'd like to definitely echo Craig's point at the end that Bibby are very much here to help SMEs, and certainly they've helped Open to Export with our competitions previously. So yes, definitely recommend having a look at what they do. One slight apology in terms of a slight bit of lag at a couple of points. It's live webinars, but hopefully everything did come through. We're now going to open the floor for questions, so please do ask questions using the control panel on the right-hand side of your screen. The first question is a quick one from Suzanne for you guys, and it's just, is Bibby primarily for UK businesses, or is it international as well?
So in terms of what we fund, that I'm the managing director for, is we fund UK businesses that have got debtors in countries overseas. So that's what we do. So we deal solely with UK businesses. we have got our 14 offices all over the world. So if there is businesses in those countries that are looking to expand and grow, then again we use our contacts in those countries to support businesses all over the world. So for argument's sake, we've got a big business in the US, we've got a lot of businesses in Europe, and we're pretty well covered across the world. So if there are opportunities to fund businesses that operate in those countries, then we use our contacts to help and support that.
Cool, thank you, Craig. And a question we've just had in from Natasha is an interesting one. I'll put this to Yvonne. And it's kind of, what changes do you foresee potentially happening with the next publication of Incoterms in 2020? And kind of how do you recommend staying on top of that?
Well, I think I probably have to be perfectly honest and say I don't have any insight as to how Incoterms may change in the next publication. But I found that if you look at the changes perhaps from 2000 to 2010, they were made to try and make the understanding of the terms and the risk transfer and the responsibilities easier. And the actual Incoterms, the official book produced by the ICC, is in really plain and simple language. And although, as I said earlier, you can go onto the internet and you can have a look at Incoterms for free, I can't remember off the top of my head how much the book costs. It's not a vast amount of money, maybe 25 euros, something like that. But it's well worth having. But I think the ICC are always striving to make things simpler. But as to what those changes might be, unfortunately, I have to say, I really don't know.
It's always going to be a case of you don't know what you don't know yet, isn't it, in terms of there haven't happened changes. So
that's right. Yeah, there might not be any.
Yeah, and as Yvonne alludes to, the ICC will have the updates when they're ready, and we'll keep you posted as well on the Institute and on Open Textbook. The next question might be a good one for Craig, actually, and it's from Farsad, and he asks kind of, in terms of your experience having worked in banks and now working at Bibby, kind of what do banks provide in comparison to what someone like Bibby does? I'll just unmute you quickly. Yeah, Craig.
Yeah, hi. Sorry, that's a really good question. I was with the big banks for 22, 23 years, so it was a long time. So, well, I suppose if I tell you what attracted me to joining Bibby was a couple of things, really. The major one was the culture. The culture, and it's easy to say there's a really good culture about looking after people, but there's a really good culture in Bibby to make sure, we've got happy staff. And as I said, the Times Top 100 awards we continually receive show that, because what we're very passionate about, if we've got people within the business that are happy and engaged, then the service they deliver to our clients and our prospects is generally higher. So that was one of the big things that attracted me to it. The other big thing was being able to make decisions. So unfortunately, I suppose the latter years in my banking career, it was a lot of credit committees, and I was unable to make decisions. Whereas in a Bibby, there was a lot more autonomy to do things, and a lot more opportunity. If we want to do a sort of transaction with a client, we've got the autonomy to make that decision. And those were two of the big things for me joining. I would also say the speed of response is higher in Bibby than it is in my experience in the banks. So the length of time it takes to get a decision, whether that's on an increase for an existing client or a new prospect, is far quicker than it is in the banks, in my experience. Generally, we do the same sort of things, but it comes down to, I think, autonomy in decision making, in the speed of that decision making as well.
Cool. Thank you, Greg. And a question we had in from Katrina alludes to one of the points you were making around currency, and she just asked, how can you ensure that you're getting the best rates when it comes to currency, and how can you manage the kind of fluctuations? Greg?
Yeah, and then a really good question. In terms of the rates, yeah, hi. Sorry, Will, can you hear me?
Yep, can hear you.
Will? Yeah, sorry. In terms of Bibby, what we always do with our clients, if they're using a bank or a boutique on rates, for argument's sake, we would encourage them to send us their last 3 or 4 transactions to see, is that competitive, and almost give it a sense check in terms of, are you getting the best rates? We're very open and honest with you. If you're getting a great rate where you are at the moment, we will tell you that. So what I would say is definitely look around. Rates do vary from business to business, so that I would say that. Also, working with someone like Bibby, we've got foreign exchange relationship managers who actually track the markets for you as well. So in terms of understanding, if the rate's moving and you might not be aware of that, we've got a team who would proactively, point that out to you. So then you can make that decision whether you wanted to maybe fix that rate to give you a little bit more certainty.
Great, thank you. Thanks, Greg. And
Thanks, Will.
we've had a couple of questions in around. So this is from Anne, and we've had another question similar, and it's, how would you kind of ask in terms of timeframes, and typically how long does it take to put funding in place, especially for single debtor but profitable SMEs who have opportunities for big contracts but will need funding for cash flow? I'm sure it's something to say relatable to everyone here. So kind of what advice would you give to Anne?
Yeah, okay. Yvonne, do you want to answer that one?
Yeah, certainly. We pride ourselves on trying to turn around inquiries very quickly. If we have interest from an exporter, a business development sales manager will go out, meet with the prospect, gather a range of information from them, and bring that back or send that back to us in export finance. We have a team of underwriters who are ready and waiting to look at deals. So once we have the information, if you think back to the slide about we look at the people that run the business, whether the invoices are assignable, we look at the financials, we look at the risks. We will make an assessment through our underwriters very quickly, and we endeavour to come back to the business development sales manager who's put forward the deal to us within 48 to 36 hours. You will then go back to the customer, a potential customer, potential client, and say, this is what we're able to offer you. And hopefully it will be something in line with what was discussed at the first meeting. Legal documentation can be raised very quickly. And we have got customers that we've put in place well within 10 days. You're talking about single customer. We're very happy to look at single customer. Craig talked about bad debt protection. Where there are single customers overseas, that's one area where we do like to work on what we call a non-recourse basis, so that if anything happens to your customer, you've got nowhere else to go to get the money because you don't have a spread of debt. You haven't got other customers' payments coming in to support you. So to have the support of bad debt protection so you don't experience that bad debt with a single customer is very important. But we're very open to looking at those businesses.
Thank you, Yvonne. And we've had a couple of questions, inevitably just asking around what are the typical fees for such accounts. I'm not sure if that's one you can answer, but I mean, is that something you can give a kind of a?
Craig, would you like to talk about fees?
Yeah, it's a difficult one, only because we're, again, I suppose if I compared it to a bank, they would have generally, especially at the smaller end, a standard tariff that was there in black and white. For us, what we do on each deal is priced on its merits in terms of, you know, what are the countries we're in, what is the success of the business so far, what are the growth aspirations, what is the turnover likely to be. So it's quite difficult to give a sort of a real cost without knowing the detail. All I would encourage you to do is, you know, if this is something you're thinking to do, is to make contact in. We will come out, we will, as I said, understand the business, we'll understand the turnover, which is an important one for us, you know, how many debtors there are, how many invoices that you're going to be raising. Is it, I think we touched on before, is it you want us to collect the debt for you, or have you got a team who can already do that, you know, for you? So there's lots of variables in it. So I know I'm not answering the question, and that's because I suppose so we're very flexible in you know, the way we operate in terms of pricing. Yvonne, have you got anything to add to that?
No, I don't think really. I think that's fairly accurate. I'd like to think that what we're charging is comparable out in the marketplace. I think our USP over and above that is similar to what was asked in the last question, the fact that we do fund a lot of markets. So not just near Europe, not just OECD markets, we do have an appetite to fund higher risk markets. That may come at a premium that would be added to the fee rate. So again, that quite becomes difficult to talk about cost. But I think it's really important to talk to us. That is our USP, that in offering services that perhaps the high street banks aren't offering, it may be that you're looking to pay extra for those markets, but you'll be getting funding on markets that we're probably very sure you're not receiving funding on at the moment.
Cool, thank you both. And in terms of markets, we had a question in from Martin, and that was about how do you find out which countries are applicable or not applicable for funding? I don't know if Yvonne or Craig wants to start on that. Yvonne?
Yeah, we do our when we come out to visit and we talk to prospects, we do have a list of markets that we're comfortable funding, and a list of markets that we can fund, but we definitely need bad debt protection. And usually those higher risk markets, we like to have political risk and not an economic risk cover as well. There are some UN and EU sanctioned markets which we're unable to fund, and we can't transact business with companies that are selling into those particular markets. But over and above UN sanctioned markets, we're open to look at markets. Now, there will be others. There will be higher risk markets that for various reasons we are unable to fund, but we try not to be black and white. We like to look at the spread of the ledger. If it's a very wide portfolio and there are customers in a range of markets in Europe, across the US, generally in OECD markets, but there is also a tranche of customers in those higher risk markets, then we might be open to funding a certain percentage of those. If somebody came to us with a single customer in a higher risk market, perhaps maybe some of the developing countries in Africa, for example, we might find that very difficult, because if we can't provide the bad debt protection, the economic and the political risk makes it rather difficult for us. But generally, we would like to have a look at the markets that an exporter is selling into and talk to them and work with them to decide how many of those we are able to fund.
Thank you. And indeed, I think our next webinar review, I think it's in May, we'll be actually tackling researching markets. So that might be something we touched upon there as well. We've had a good question in from Chris, which is, do you get involved with supply chain verification to help mitigate the risk against lending? I don't know if that's one for you, Yvonne.
Craig, do you want to tell? I can answer that otherwise.
Craig?
Yeah, you go ahead, Yvonne.
Oh, it depends how much of the supply chain you're talking about. Obviously, in invoice finance, we're looking at the delivery from the supplier to the end customer, and actually verification is very much part of the credit controller's day job at Bibby. So when we receive invoices in from our clients, we will take a cross section of those invoices, depending on what's been agreed. We'll contact the customer and we will say to them, have you received the goods? Has the service been delivered? Will you be making payment? Are there any disputes? The advantage of that for our clients is that if there is a dispute, we're learning about it early, not just when the invoice matures. So we're able to go back to the client and say, we've looked at customer debt verification on a particular customer, and they've come back and said, well, actually, we're not happy with the quality, or we're missing the invoice, or the delivery hasn't come in yet. And it enables our clients to act very quickly. So ideally, we can resolve those queries before the invoice even matures, which means payment isn't delayed. So yeah, the verification process is very important, both to us and to our clients.
Thank you, Yvonne. And a question which was sent.
Yeah, no, I agree. Just sorry, just start by saying. Yeah, sorry, Will. Just going back to the previous question. One of the things I would say as well that financiers generally would have lots of information about the countries that you may. That's probably more the previous question, but the countries that you're looking to go into. So for argument's sake, we've got profiles on countries which will talk about, what's the average length of time it takes to get paid in that country. If you had to actually, sue in that country because there was a dispute and they weren't paying you, what is the process around that, and what is the sort of judicial system like in that country? So there's lots of profiles which will hopefully, before you take on any new contract in those countries, might give you a steer in terms of, is it a good country to be dealing with? So please ask your financiers about those profiles, as well as I know, the likes of Open to Export are happy to provide that information as well. Thanks, Will.
Cool. Thank you, Craig. No worries. And then another question in from Felicity, and she's asked, is it worth paying extra to go for non-disclosure or confidentiality when doing invoice factoring? I'll put that to you, Craig.
Yeah, I would. So it's more expensive if we're collecting the debt for you for obvious reasons. So, if I talk about Bibby, we've got a team that can speak, around 25 different languages. So it does cost more money to be disclosed, and we actually collect the debt for you. What I would say is, for me, it comes down to the quality of your team. If you've got one who can do that for you. So if you've got a really good team around you that, they raise the invoices, they've got great processes of chasing the debt and sending chaser letters in all of those things, then it may well be, confidential invoice discounting may be better for you. If you're a smaller size business and it's just you running it, it may well be you haven't got the time to be chasing the debt. Sometimes people like us to chase the debt, or a financier to chase the debt, because they can sort of distance themselves with that part of the service and say, well, actually it's Bibby who's chasing it, it's not me. So what I would say is it really is dependent in terms of the skill set you've got, what you're actually looking for, and I suppose what the budget is as well. What actually can you afford to pay? I would generally say if you're starting off, then sort of almost outsourcing that collection service we see is generally beneficial, because it allows you then to go on and do other things like drive the growth of the business and generate new clients. So there are the if we look at invoice finance, there is the confidential side of it, and there's the disclosed side of it. So again, that is your preference. In terms of, some people like the confidentiality. They don't like to think that there's someone in behind the scenes who are helping fund the business, and there's other people who are quite happy for the financier to be named, because it could be perceived they've got a bit more weight, and we'd rather say we don't really want to say no to a bigger organisation. So there's lots of variables to it, and that's why sitting down with a financier, going through all of these things and making sure what's right for your business is really important before you take any sort of funding.
Thank you, Greg. And a question just in from Lucy, which is really interesting. She's asked, what impact could things like smart ledger technology have, and how might it work? Is that something you can speak to Craig?
Yeah, so I think there's a lot more players in the market than there ever has been, which I think is great for UK businesses, in terms of that there is a lot more cash, I think, available. I think what's really important is service and relationship, but that is different from business to business, I think. But for me personally, when we're speaking to our clients, and we get surveys around client satisfaction on a monthly basis when we survey our clients, I think the thing that comes out to me very, very loud and clear is they want relationship managers who can go out and have got the authority to make decisions. They like speed of service. They like advice and support, and feeling that they're not, I suppose, alone in their journey. And I think, although for me, my own opinion is, fintechs can give money, and they can give money quickly, I'm not so convinced that the relationship to help, especially in some of the complexities around exporting, or any actually business, are there on that platform. And that's just my opinion. But as I said, it's different from business to business. Some businesses might not value relationship is important as others. But I would say we're winning record levels of business and retaining record levels of clients down to relationship. Yvonne, I don't know if you've got anything else to answer that.
No, I don't think so. I think you've covered that.
No, yeah, thank you, Greg.
Okay.
Very good answer. And another question we've had in from Harry, and he's asked about, in terms of conditions, whether it's worthwhile to have things like a Brexit clause included in case things like jurisdiction might change because of the EU exit or anything like that. Yvonne, do you want to? Would you?
That's an interesting question. I suppose I'd start by saying I'm not quite sure what a Brexit clause might include at this moment in time. I'm not sure that anybody does. But in terms of legal jurisdiction, although we're in the EU, you'd be surprised how legal jurisdictions change from market to market. So, how Southern Europe might differ, for example, than Northern Europe. If you're trading anywhere, perhaps north of the Loire Valley, and you were trading under the terms and conditions of your customer, it might be, I suggest, more straightforward perhaps for litigation or debt collection for protracted default in those markets. If you're going south to Italy and Portugal, markets like Italy, they close for 2 or 3 months in the summer. The courts aren't open. It's extremely difficult. So, with or without Brexit, already our exporting clients experience issues where they're working to the legal jurisdiction of their customer as opposed to working to the legal jurisdiction of the UK. So, yeah, I think Brexit definitely will come into play into contracts and terms and conditions. But what actually are the specifics that we should be including at this moment in time, I think it's a little bit difficult to say. It's a bit too early.
Thank you, Yvonne. I'm going to try and squeeze one more in. It's from Brian, and he's just asked about the relationship which you have with UK export finance and some of the work they do. Is a relationship there, or is it something you support?
It's yeah, it's a relationship that we're working on, if I may say. At the moment, it's generally confined to the big banks and maybe one or two fintechs. There are, at the moment, very few non-bank finance providers working with UK export finance, and it's something that we're speaking to them about very closely. So we would hope that in the foreseeable future, a relationship with them is something that we'll be adding to our bow.
Cool, thank you, Yvonne. And yeah, it's many thanks to both Craig and Yvonne. There were some really great tips on managing the risks of exporting there. And yeah, I hope everyone has found that useful. And yeah, thank you again to Bibby.
Thanks very much for having us.
Before heading off, I'd like to just quickly draw your attention to a couple of events being run by the Institute. First of all, there's our regional trade summits, which move into Edinburgh for the Scotland Summit on April 25th. If you're based in or near Scotland, I definitely recommend going along to that for some excellent networking opportunities and some cutting-edge thought leadership around the biggest issues in international trade. We've also got the graduation ceremony in London in May, which is a great opportunity to meet some of the future stars of international trade, and also to network of senior figures and decision makers across the industry, including the Secretary of State for International Trade, Dr. Liam Fox. Go to export.org.uk/events to find out details about those. We've also got just one more month of the Spring Export Action Plan competition to go. The deadline for entry is May 4th, and the final this time is taking place in London at the UK Trade and Export Finance Conference on June 7th. It is once again a great opportunity for SMEs to win £3,000 cash towards their export plans and further support and prizes. More information about that is on our website, and the deadline again for entry is May 4th. As mentioned earlier, today's session is part of a three-parter on managing risk in export. The second being on the legal risks, including IP and trademarks on April 24th, and the third being on corruption risk, which is at the start of May. You can sign up for details about all of our future webinars at opentoexport.com/webinars. As always, please do take our exit survey to let us know what you thought of today's webinar and to give us any suggestions for improvements or for future topics. But for now, many thanks and goodbye.